Hi there, back again with me, Rati in Mami Beluga Investing. Today I'm going to discuss Singapore Airlines Limited with stock symbol C6L. Today's video is a part of my YouTube video series on Singapore Straits Time Index or STI series. For those of you busy people, my conclusions as of April 19, 2021 for Singapore Airlines is it's a tough industry to be in. And at the current price, it's pretty interesting to make some small position in Singapore Airlines. Okay, how did I come up with these conclusions? Follow my analysis throughout the video. Disclaimer, this is an amateur video. My main intention is to record my learning journey to invest and practice investing from scratch. This video shouldn't replace any financial advice and neither suggestion for you to take up position, buy or sell in the stock market. Okay, please conduct your own research before making any decision. Finally, feel free to put your comments, criticism and suggestions or requests for videos in the comment section below. But please be nice to me as this is my first series for Singapore stock. Okay, now let's have a brief look at the company's profile. Okay, frankly, I feel rather awkward that I visited Singapore Airlines website not for booking a flight, but for gathering materials for this video. But then, okay, let's go to the profile now. Okay, as a company, Singapore Airlines is huge. It consists of passenger service, cargo repair, maintenance, and so on. But the most highly visible services for, the lay people are the Singapore Airlines itself, Silk Air, and Scoot. SQ's 2020 annual report listed two largest shareholders. They are, first, Napier Investment Private Limited with 33.77% of share, and then second one is Temasek Holdings Private Limited with 22.18%. Okay, after a little digging, I can see that Napier Investment Private Limited is a subsidiary of Tembusu Capital Private Limited. And furthermore, Tembusu Capital Private Limited is a subsidiary of Temasek Holding Private Limited. And finally, Temasek Holdings is wholly owned by the government of Singapore. Okay, Napier Investment became the top shareholdings of SQ stock since 8 June of 2020 via right issue. So indirectly, the majority of stock of Singapore Airlines is held by Singapore government via Temasek Holding. So that was a brief look on the company and the shareholders' composition. Now let's look at its performance. Okay, so here we have Singapore Airlines earning per share, in short EPS, over the last 20 years. Okay, it's a lot of information for me to collect. Okay, the EPS is plotted with round red markers connected with thick red lines. And then in the same place, in the same graph, I also horizontal dash line, the green line, horizontal green line to indicate the zero level. If the EPS goes below the green line, it means that the company is recording a loss. At a glance, we cannot say that Singapore Airlines is a growth company because its earnings fluctuates a lot over the last 20 years. But the positive thing is that it had never recorded a loss prior to the pandemic, at least since 2001. Okay, since 2001, 2020 is the first time that Singapore Airlines recorded a loss. COVID-19 pandemic that results in travel restrictions seems to significantly impacted Singapore Airlines performance, as we can see here. Okay, now let's look at the EPS history closer. Between 2002 to 2008, there were rather high growth. Okay, it's a good time to be with Singapore Airlines, I guess. And then the first major earning drop happened from 2009 to 2010. It improved again slightly, yeah, in 2011. Then it became pretty stable between 2012 to 2015, which compared to previous 5 years' earning can be considered as quite low. The earnings showed a lot of improvement from 2016 to 2019, but it didn't get to as high as the previous years in 2007. But it dropped a lot for 2020. I guess it's contributed by COVID-19 related travel restrictions. Okay, now that we have seen how the companies perform, let's take a look at what are the perks for the shareholders. I mean dividend. Okay, let's go to SQ's dividend history. So here I plot Singapore Airlines dividend for the past 10 years. Okay, it's a lot of information to collect as well. I collected from 2009 to 2019. The dividends are plotted as red round markers connected by a thick red line. The markers are also annotated with two numbers above and below the markers. The numbers above the markers indicate the amount of dividend in Singapore dollars, while the numbers below are the dividend payout ratio in percentage. As a comparison, I have also plotted the EPS through a thinner line, the same color, red line. At a glance, I can see that Singapore Airlines is rather prudent in their dividend payout. Since 2012, their dividend payout is roughly proportional to their earnings. It's ranged between 36 to 69%. There was no dividend payout for 2020, which, okay, makes sense as the company recorded a loss. Okay, so that was SQ's dividend history. The next question is, should I buy Singapore Airlines stock now? So to answer that question, here I placed 4 layers of information that can provide some guidance for me to evaluate Singapore Airlines' reasonable price. They are price, which are pretty stable for the last 20 years. So if you expect a major rise in Singapore Airlines price, I think it hasn't happened for the last 20 years. Then there were a few notable dips. The first one in 2009. Then there's a large drop again in 2020, which I guess COVID-19 travel restriction related. The recent large drop seems to be moving towards recovery. There are also some spikes. The first one was in May 2007, then 2011, and lastly 2015. Okay, let's go to the next layers, which is 10 times annualized earning multiply. Here I plot as a dashed green line. This is my first indicator to figure out whether the company is cheap enough. Normally, I would consider the company to be relatively cheap if the price, is below this dashed green line. The third layer is 15 times annualized earnings. Similar to 10 earnings multiply for mature company, I will consider share price above this 15 times earning multiply to be expensive. The fourth layer is 20 times earning multiply. Above this indicator would consider the price to be really expensive, particularly for mature or non-growth company. At a glance, Singapore Airlines stock price doesn't seem to directly correlate to its profitability. For about 8 years, that is from 2011 to 2019, the share price was constantly above 20 earnings multiply. Considering it's a mature company, the price can be said to be really expensive. But strange enough, later in 2019, though its EPS performance improved significantly, the price didn't follow. EPS is earning per share, so it means that the company's profit increased significantly, but the price didn't follow. Okay, the market reacted pretty aggressively to SQ's earning drop in 2020 though. Perhaps it was a general negative reaction to airline industry in general in 2020. As of 23rd of April 2021, when this video was prepared, Singapore Airlines stock is sold at $5.03 per share, which is around its 10 times earning multiply. Not too far from its 10 times earnings multiply. Okay, now let's wrap up. So in conclusion, in terms of value, discounting the pandemic performance, Singapore Airlines is a pretty compelling dividend cash cow. However, in terms of economic situation, especially the current negative circumstances surrounding airlines industry in general, as well as its potential for long-term growth, I won't be too confident, or rather not confident at all, in making any direct position in Singapore Airlines. But there are several things that I haven't mentioned and take into considerations. Okay, Singapore Airlines has a pretty strong brand, and it's mostly owned by the Singapore government, though indirectly. Okay, with economic recovery, earning may return again. So far, Singapore is still the hub for Southeast Asia or even Asia Pacific for air travel. Not to mention Changi's airport's strong branding and quality of service as Singapore Airlines' main hub. So the airline may be desirable for travelers post-pandemic. Okay, hence it's probably not too bad to put a small position in Singapore Airlines because the price is okay considering its earning. But we need to be careful since there's a big uncertainty on how the airlines industry or airline business will fare post-pandemic. Okay, that's all for today. Thanks for watching. Don't forget to leave comments and please subscribe to my channel. Okay, that's all and bye-bye.